Here goes.
The broadcast is now starting. All attendees are in listen-only mode.
As we wrote in today's PMP report, the market's struggling to find direction, but as we all know, things can change on a dime, and it looks like it's potentially looking to head lower. This downtrend that began seems to be intact on the basis of today's market action. Right now, the volume is running heavier than normal, so we looked like the number of these averages that couldn't get above resistance, and now they are, it seems like the point of least resistance is to move lower. We talked about how a number of these focus list names of ours, they bounced off support, and the time to buy those things, of course, was a few days ago when they, the best ones often bounce the fastest. And a lot of these did bounce, like I think 5 days ago. But if you look at the way they've bounced, here we are 5 days later, a lot of these names, I mean, you can look at Baba, for instance. Baba's bounce is on lower volume, and it looks like it's struggling to maintain this upward motion. There's a number of these names that are doing this, like EGRX, same problem. GIMO, that one is that one doesn't look so good. That one looks pretty sickly, actually, as far as any sort of meaningful bounce.
Yeah. Hey, Dr. K. You know what? I should point out, I've actually been hitting these short, both of these names, Baba and Gigamon, over the last couple of days on the rallies, right up into the 20-day, and I'm short Baba right now. But a lot of these look failure prone, and I would say on most of these names, I'm on failure watch. In other words, looking for some sort of a breakdown, back down through a prior breakout point. Like you can see on Gigamon, the breakout point here is what, like 47, say, and you could bust a 50-day and roll over, setting off a late stage base failure. And that's actually what I'm watching for in a lot of names, even Facebook, for example. Anyways, just wanted to throw that in there.
It makes sense because, of course, we know maintaining a fluid stance is always key, especially in these kinds of markets, the way the market has been trading over the last couple of years. And so, there's like just a whole slew of these things that are not looking all that good in terms of the way they're bouncing. So that kind of telegraphs to the market, or that they telegraphs to traders that overall the things aren't running so smoothly under the hood. Even something like NVIDIA, which was or has been quite the leader, if you look at its recent action, if you look at the prior action, say in early September when it had that bounce, that was a strong bounce. It just kept going higher into new highs and then continued. Compare that to the bounce it had 5 days ago on the 13th, and it just can't seem to get going. So those are the clues that are telling us to be mindful that this market could end up heading lower. I think well, we all know that the markets tend to be forward-looking, and the question, I guess, is if the markets think that the Fed is going to hike in December, and right now the odds are still pretty high that that's going to happen, then I think the markets are going to induce some sort of correction ahead of that hike. And we saw a bit of that, well, last year in September, the markets pulled back down pretty sharply, and then, of course, in December 15th, rates were hiked. And so, and prior, just in the month prior to the December 15th rate hike, you had a couple downturns in the market that were pretty sharp. I mean, the NASDAQ lost 5% and then 6% off its peak in rapid succession and before December 15th. So I wouldn't be surprised to see some recurrence of that right now. I think the precious metals and the bonds are clues, and they're telegraphing to us, okay, they've got some support, but it's, again, the bounce is pretty weak on GLD, on SLV. If you look at bonds like TLT, these are very weak bounces. So sure, the respective 200-day moving averages served as support, but only temporary, because these bounces are very weak, and I wouldn't be
Actually, hey,
surprised to
Dr.
see
K,
these things.
I would note on the TLT, the 200-day is resistance because it's already busted the 200-day line. And now
Yeah, exactly.
you get this churning weak rally that's stalling out right at the 200-day line.
Yeah, and so these things are signatures of weakness, and of course if the TLT moves lower, that means yields are going higher and the market is anticipating a rate hike sooner than later. I don't think we're going to get one in November, but we'll, yeah, I think that December seems to be the month that the futures are projecting. I think when I last checked, they were up around 70%, which is pretty substantial. So at that rate, I think we can just go through some names that are setting up for potential downside moves, because there are a number that are, what's nice is that a number of these names are moving higher, but in a sickly manner. So they are setting up for some nice shorts, and I'm not surprised to hear that Gil has already short some of these names. So Gil, if you'll take it away with some of your short ideas.
Yeah, sure. I'm going to answer a quick question because it relates to one of the names you mentioned. EGRX had a pocket pivot a couple of days ago, still as a low volume, still viewed as a low volume rise. This doesn't look right to me because the pocket pivot was stalling. I think also, Scotty, you got to put it in context with the general market. So if you look at this, and also the general market and the macro pattern of the stock, okay, what is this thing doing? You look at it on a weekly chart, well, that looks like a big pod to me, a punch bowl of death. And you had a breakout here, and that breakout is now starting to fail. And what's the first sign of a breakout failure on the right side of a pod, or even on a late stage failed base? Well, very simply, if this is the breakout, the first clue will be a breakdown through the 20-day line like you have here. I don't like this green color. I want something that contrasts a little better. Unless, can you guys see that okay? I like this, what was I using before? Like, nah, that's not good. They need some better colors up here. Well, we could use black. Black, I think black stands out, yeah. So you can see here's the break below the 20-day line, okay? Now I've gone and made a big mess here. So you see here's the break below the 20-day line. It doesn't occur on heavy volume, but then you get some weak rallies, you're churning around, and now you're sitting on the 20-day line. You've already broken down to the 50-day line. You rally just above the 20-day line. Now you'd be looking for a break through the 50-day line and back below the breakout point, okay? And that's how a late-stage base develops. And you can see that, you know, if you're paying attention, you might have noticed that when Acacia tried to break out here, you finally, let's look at this. This was a tight flag, allegedly, you know, and so here's a breakout up there, and so all the morons come running in and buy it because you have nice volume. But the stock's already been up, like, I don't know, what was it up at that point, Dr. K, from the IPO, like 300-400%?
Yeah, it was one of the two major price leaders, so it was up a few %. So you've already got your,
so
you got what you need out of this stock.
Cinderella's having one hell of a time at the ball, and she's about to leave, you know, and I keep talking about this so-called Cinderella principle, which is that in this market, if you think, you know, 500, 600, 700% moves that are easy to hold through, okay, there are some rare, decent-sized moves, but they're not that easy to hold through, and I prefer to campaign them by selling into sharp rises and then coming back in on a lower risk entry point. So, for example, on the undercut here, once it's failed, you have the undercut here of the prior lows, this set of lows in here, here, and here. Okay, and you undercut that, and you get a nice trade out of it of about 10-15%. And then in this market, I think you take it if you recognize that you're getting a little bit of a fractal head and shoulders in here. You can see the heavy volume selling here coincides with the right side of the fractal head. I hope that's not all too complicated for you, and I'm drawing it too fast because basically to me it looks like a big mess. But this would be the breakdown on the right side where you see the volume picking up, okay? And then so here's like a fractal head and shoulders, and you get another shoulder here. Now you're starting to break down through a neckline, okay? And you notice how the neckline, if I drew this better, is coinciding with this area of resistance below the 10-day and the 20-day line, and now you break into new lows. But if you had noticed this, once it fails, okay, now here you're holding the 20-day line more or less. So this looks like a Louis pattern, like it's going to try and rally, and it does. But then you break down and you gap here. You gap down through the 20-day line on heavy volume. Now this thing is on failure watch. Okay, once I start to see this sort of action, something goes on failure watch. It doesn't mean necessarily that it's going to break down, but it's on watch. I'm watching this thing closely, because if it starts to falter, I'm going to jump all over it on the short side and try to scalp a few points at least. I think in some cases, if we get into a deeper correction or even a bear market, some of these stocks have already flashed tops, and they've got some work to do probably on the downside. So this could be, a lot of these patterns forming now are what you have to watch for as the harbingers or the initial, say, embryonic stages of your short sale campaigns, because some of these are just starting to come loose. So Acacia is a late stage failed base. You know, I don't care what you say. I know I actually get some weird emails. So for some reason, I'm included on some people's mail lists, and they put out all this bullshit about, pardon my French, about, you know, Acacia, some precedent for Acacia up here and how it's going to go higher. It's like, what drugs are you on, man? It's like, this thing's had a huge, you know, it's just like, but and I could tell you, somebody we both know actually sent me this long precedence analysis of Acacia, and I just said, you know, this is pointless. It's not going to help you. This is not the 1990s. Wake up. And you know, this precedence analysis is a bunch of baloney anyways. I mean, you don't need it. You don't need to say something looks like something from 20 years ago and therefore it's going to act the same way. That, to me, that's about as stupid an analysis and simplistic and, you know, a brain numb analysis or way of looking at a stock in order to determine whether it's going higher or not that you'll ever see. So it actually gets me a little hot under the collar, as you can tell, because I think IBD sells a lot of this crap to people, you know, and it doesn't work. It's all, it makes for great, you know, seminars, I suppose, and crap you're going to sell people, but it doesn't make you money. What makes you money is seeing what's happening in real time and acting on the basis of what you're seeing in real time rather than trying to come up with some macro picture, especially in this market. Anyways, the other one that broke down is Twilio. So, you know, of course, you know, there's two, I don't know how many, two bases there. You could even say there was a little base at the beginning down here, you know, maybe started about 6 days after it came public. And it sets up, moves higher, breaks out of this little teeny tiny flag, which there was, then we determined that you could have called this a pocket pivot here, Dr. K, I think so. But anyways, and then you get the, you know, we got on it right here. And we put it on our list, and the thing ran up 48% in like 3 to 4 days. So to me, that's like, okay, what more do you want? And you sell into that, and then it backs and fills. You maybe buy back on the undercut. It sets up again. You get another little test of the low here in the 20-day. Volume's drying up, and boom, you run out. You break out. So all the morons come in and buy the breakout, and it fails. So what's the first sign of failure? Can anybody answer that question? Well, since the top of the breakout here is 66.40, that would be the new high buy point according to the geniuses at IBD, then you would be buying it right there. You get hammered, so you break down below that point. You also bust the 20-day line right here, and it's not even on heavy volume, but then you skitter along, and you can see that this thing's not getting any juice, and it gaps down on the announcement of what I think was a 4 million share secondary offering that's now 7 million and 638 million. I'm sorry, 6.38 million, almost the whole thing is being sold by insiders or selling shareholders, code word for insiders, who want to bail out and take their money out. Gee, why? If this thing is going to the moon, you know, according to another bit of precedence analysis somebody sent me. Same person, by the way, Dr. K. I'll tell you later. But, you know, this stuff, it's comical. It's comical how IBD has brainwashed people into this way of thinking that it's just so wrong right now. It's not even funny. It's sad. It's truly sad. You know, and I don't know. Just I hear too many stories of people just getting their clocks clean. So if you're making money this year, be happy, because there aren't very many doing that. And a lot of people just getting chopped up to death using typical can slim approaches. So. And then let's look at line. I mean, the list goes on. Here's another one. Failed breakout. You can catch this breakout here, and you get about a 15% move higher. This one was a little bit slower, but you could have caught the U-turn breakout. But if you were really awake, you would have caught the undercut and rally on this one down here. It undercuts this low, you buy it there right after an IPO, setting up, and then boom, we're off to the races. So you would have caught a really nice move from here to here if you were on top of that. And I'm ashamed to admit that I was not on top of that at the time. I actually picked up on it right here and caught this move and sold into that, and then of course it breaks down and it violates the top of the base. So you're not really ever wanting to buy that if you were using say a more realistic approach to buying breakouts. You would have seen this as a trend line breakout, so you would have bought there, not this. But of course here's probably where everybody who reads IBD is reading or buying into it. So, you know, anyways, let's see, just watching this market, we're down 50. Still plunking along. It doesn't really want to give way though, Dr. K. I notice it seems to like get a bid down there when it comes down far enough, but then it'll start to bounce back up.
That's QE, yeah, in action, and QE is always a part and parcel of this market. So yeah, we don't really get very many clean breaks to the downside unless you have some external event like China that we did last year, and then also the beginning of this year, which caused a nice correction. So I think something like that, on that magnitude, needs to happen. And I'm again, I think that a lot of bubbles exist around the world globally. So yeah, I wouldn't be surprised to see you know, another bubble crack.
Anyways, let's see. So line basically, you know, then you could have bought this undercut here again, so that would have put you in a better position. Then you had this little mini undercut here. So there are buy points, you know, in the pattern that aren't so obvious, and that's where you want to be buying, because again it has a breakout up here, and it fails. And what's the first sign of failure? Again, the breakdown through the 20-day line, which occurs right here, just late last week, I believe. So it would have been last Thursday. So you break down there. Volume doesn't have to be heavy necessarily, but it is picking up slightly on the day. So that's not looking so great. And that becomes a late stage failed base. So the point to be shorting is along the 20-day line. So that's why I'm watching these names like the Gigamon and the Alibaba. Let's see, what am I doing here? Okay, there we go. Whoops, no, we got to get back to here. So, you know, so you want to watch these things. I just noticed that my system auto covered this. It's holding up pretty tight, but it may put another, so I had a trailing stop on it as it was coming down, and it traded back above that, so it stopped out just above 104. So I'm not sure it's some, but I copped a small profit. So we'll see what happens from here. But it's holding tight along the 20-day line, so you want to watch for this. But I think it probably breaks with the market. Anyways, just thought I'd mention that. What else has started to fail? So all these hot IPOs, these are all toast. They're all done. Impinge, okay, there was a failure, busted the 20-day line. Now it's living under the 50-day. Is that a bear flag or a Louis? Is it going to turn back to the upside, or are we going to see the thing bust wide open? So, you know, but it's certainly not in a buy position unless you saw some sort of pocket pivot coming back up the 50-day. Anyways, any other questions? Nobody's really got anything, I notice. I think you can expect the situation to remain fairly volatile, because I even noticed today, we went down 40-something Dow points, we rallied back up to what, plus 30 or something like that, and now we've rolled back over to minus 42. So you're back at the lows of the day, so you're going to test support, I think, along this level, and then we'll see if you split wide open. So, but, you know, I think if you're going to do anything, you better be pretty fluid and pretty nimble, because this is a very difficult environment, and to make progress, I mean, I don't make huge progress except in very rare spurts. Otherwise, it's just kind of chipping away, and things don't really break very hard in one direction, at least not over the last several weeks. In August, of course, you had the big spec move in all of these IPOs. Anyways, so what are we doing here? So I think, basically what you're watching for are, at least on the short side, you're watching for stocks that are potentially breaking down, and you want to jump on them when they start to roll over, and those will provide some quick short profits. If you could have borrowed, I know somebody who bought puts on this day when they gap down here and have caught this move. So if you can buy puts and you can't borrow the stock, that's always a good substitute. Gigamon just hanging. We'll see what happens there. I'm watching the BABA now as it rallies because I might put it back out. But you can see, look at how quickly it turns on you. So you see the cross, so you got this cross right here. So once that crosses, it turns back to the upside, and now it's heading back for the high. So this could become shortable again. We'll see what happens. But I'd watch for a failure rallying. You've got the MACD crossing very high very quickly. So I think that makes it vulnerable to snapping back in. And we'll see if they get the 6-period line here back above the 20-period line. So for now, I'm content to I've covered and taken a small profit. Now I'm going to wait and see how this rallies so I can come back after it. And this is basically how I will work the short side on an intraday basis. I don't let anything really get out of control really much at all, and I'll be working positions on the short side by putting them out, and if it starts to turn on me, I've got my trailing stop, and if it hits that, then I'll look at coming back in if it continues to rally, and I'll just kind of work them that way. And that'll get me in position for a potential intraday break if we get that. Now, there's no guarantee that we're going to get that, and that's why you have to maintain a fluid approach. Somebody's asking, is there such a thing as negative pocket pivots, the opposite characteristics of normal pocket pivots that can be guides for shorting?
No.
No, but you don't need
not really.
You really don't need them.
Yeah, I'll just say it's extra noise. I wouldn't use a negative pocket pivot in that. I wouldn't use negative pocket pivots at all. You just train your chart eye to looking for, contextually speaking, weak bounces that are all over the place right now. But obviously we talk about many different types of short sale setups, and pocket pivots negative pocket pivots often don't really have anything to do with those types of setups. So I would just be better off, if I were you, to just train your chart eye to develop a sense for these names that are looking prone. And always keep in mind, keep the chart in context with the general market. So and you have to, of course, maintain that fluid approach, because like we saw in that other stock, it could be a Louis, which means it's going to go higher from here, or it could break down. If the market breaks down, it'll probably break down with it, is my guess, because that chart telegraphs that very strongly. If, on the other hand, the market starts to rally and it does not form a Louis pattern, in other words, it doesn't bounce, and it stays in this kind of sideways, sickly manner, then it becomes even more worthwhile a short candidate, because contextually to the market, it's prone. I can't hear you, Gil.
Oh, I'm watching BABA trade back up towards the highs of the day. Notice how you're getting a MACD stretch here, so I'm kind of watching this. So, I mean, I don't need to be short this right now, but I'd like to see the general market start to peel off a bit here. But this is a real-time market webinar, so I am trading. So I will pause from time to time and check things out. So it's not that I'm ignoring you. Oh, somebody's trying to pitch one of their names, EMCOR, all in on EMCOR. Okay, whatever. Everybody, don't run out and buy. This is like an idiot stock. I'm sorry. 263,000 shares on a $5 stock, $6. So the only idiots buying this are brokers, okay? And they're calling their clients to get them in. Who else would be moving something like this? It's $5. What do you think, Dr. K? $6 a share, and you're trading 263,000 shares. Give me a break. Okay. All right.
This is treacherous.
Nobody buy that, because my suspicion is that anybody bringing this one up is pumping their own position. Talking their book. Sorry.
Also, the volume's not even there. I mean, the volume's only 18% right now on this thing, so it could even be a short candidate.
It's on an intraday chart. It's like, make an appointment. Here's 2,000 shares trading here. Right now it's trading all of, I'm sorry, 20,000 shares trading 24,000 there. So see, this is a good broker stock because clients like to feel like they're buying a lot of stock. So if they can buy 10,000 shares of a $5 stock rather than 500 shares of a $1,000 stock, they'll or I'm sorry, $100 stock, they'll be it makes them feel better. So it's sometimes an easy sell. Anyways, any other questions? So what do we watch? So we're watching for potential breakdowns in stocks that could be late stage failures. We looked at this one last week, I think. And there was WikiLeaks dumped some emails, I guess. Some of them were Colin Powell's when he was Secretary of State. He's also on the board of directors of Salesforce. And so you see how BABA came in now? You're at 104.22. But I like the way they do this. You'll see this happen in stocks. All of a sudden they'll have like a rush to the upside, and then it just kind of gives way, which to me is bearish. So it's like something or someone's trying to ramp it, and then it can't really hold up, and then it just kind of floats back in. So on an intraday basis, those are the types of things I like to short into if I see them. But anyways, so yesterday there's a bunch of stocks. I mean, a whole slew of these cloud names were on this list. Now is one of them, but this looks to me like a short up here around 80. The only problem here is earnings come out next week. So I think Salesforce remains shortable and rallies up to the 200-day line. You can see you're getting a black cross. And you can see, like I pointed out last week, if we look at the weekly chart, it's a late stage sort of pod breakdown thingy. So there goes BABA now rolling back in. See how that works? And they just kind of run it up real quickly. I didn't put it back out mainly because I've got some other things short that are working also, so I don't really need to stick my neck out too far if the market's not going to bust wide open just yet. We'll see how things progress later on. Somebody wants my short list. Nah, I'm not giving away my short list. You have to make up your own. So what you need to do as an exercise is go through your long watch list, and I just showed you stocks that would be on short watch, BABA. What were the other ones we were looking at? I don't know about this EGRX. It doesn't trade enough, I think. 419,000 shares, not really enough. But also, let's run through some like, let's see. What's been acting like Acacia, Line, Twilio, those all have busted. Workday is hanging along the 50-day. It was on the list of buyout targets, CRM's list of buyout targets. It went nowhere. See, we're rolling back again. So this makes perfect sense to me. And now we'll roll back, and then we'll blow up. So we hope. Anyways, so that's another one, that it was previously on my long watch list on the way up, so that's on failure watch. Here's one that was on my long watch list, and it broke down. You can see how you had a breakout attempt up here, and that failed. And once it broke through the 20-day line with some authority, took it a while though, it's just continued lower. But you can see this was also a big V-shaped pod sort of formation. It went a lot higher before it rolled over, but I think now it's failing. But you're seeing a lot of these things fail. I think, what's Pegasystems? That was another one I saw rallying.
Yeah.
See, they might be more of a buyout target. So it might also be that now, because it had a better rally, might be seen as more like something CRM would want to acquire. So, this could be. I think if you're working the short side of these, and I shorted some service now yesterday around 80, and it's coming in. The volume's not heavy, so I think it's a cover near 78, and just scalp a $1.50 or so. But the danger here is that there is some, merger type stuff going on in the group. We've already seen CRM buy Demandware. I guess LinkedIn would be considered a cloud stock, and CRM was fighting with Microsoft over the stock, and Microsoft ended up buying them out. So you do have that danger. So the way I would kind of work around that is I only short them on a day trading basis, and then I'll cover them, hoping that the moves will be continuous to the downside, and I'm able to jump back on the stock the next day. That's the way you avoid something like that when you're dealing with a group of stocks that are subject to news. Tesla's something like that, and I think Tesla though is a short into this rally. It certainly was the new product announcement. I mean, the technology is great and everything, But if you look at this pattern, you sort of have a big V-shaped pot, and it just can't hold up. So it fails, and you're just rolling, rolling, rolling. And now it looks like you're in this descending triangle on the weekly chart. See, now we're coming off again. See, you could have hit Bob at 104.40, and it trades right to the top of the range. But you're in this descending triangle, and you're probably just going to fall out. They come out with earnings next week. Don't be surprised if that's what happens after earnings. It wouldn't surprise me. I think I love the cars are great, the technology is great, but I think the company is just ultimately cheesy. And Elon Musk is a brilliant guy, and I don't understand why he engages in cheesy stuff like tweeting about mysterious product developments and trying to pump his stock. Because I think all of these bounces have been caused by tweets about this or that product announcement and all other baloney. So, anyways, Wix long. Good luck with any longs. I don't. Wix is a tiny little stock relative to other names you can buy, and I mostly stick with big stocks here. But whoops, come on, Wix. You know, buy it. You're reversing now. You had a pocket pivot yesterday, so if you're buying that, you're an idiot, and it just pulls right back in. I don't think I'd buy this. When did these guys come out with earnings? Oops. You got that Dutch K 1110. So yeah, I don't see any. I wouldn't buy this thing here. Look how far up it is. That's probably failure prone. So, and I wouldn't be thinking about going long anything. I don't consider this really a target-rich environment, and I would even say for the short side, it's not necessarily target-rich either. But I think there are some things to be watching for. So in other words, the failure watch that I'm talking about that you want to be on for some of these names that could turn into late-stage failed bases. Wix wouldn't be one because it trades 326,000 shares a day. So that's a junky little stock, but it looks pretty. And I don't traffic in these kind of names. You know, if I'm going to deal with stocks, I need to trade a fair bit more volume. Like Weibo's a little better, but notice how it's starting to come loose. And Momo has also been another good one. You got to love the name. It is a Momo stock, or it was actually back in August. But see, that's when you had all the speculative moves. That's when the market was had a highly speculative component to it that was working. Now it's kind of wedging. So notice how it has had two breakout failures. You guys see that? You got one here, and you got one here, and you got big volume. So look at how great they look. Big vol, you know, just huge volume there. And now you get this cheesy little wedging rally back up above the 10-day line. Earnings don't come out till the middle of November, so we'll see what happens there. But yeah, GoDaddy, I was going to point that out. GoDaddy does look like Wix. They're in the same business. They help people create websites. So, you know, if you think that's a hot business, then, you know, jump all over them. But I still think this one's failure prone. It's sort of a big, ugly cup. You know, that's just an ugly pattern. And to me, it looks like it's stalling up here, so it almost looks like it could become shortable. So, anyways, I want to look at let's look at what's left on the focus list. Whoops. Here's the latest one. So we'll go like, whoops, you know, move this somewhere else. But you've got SSTK is one. That's holding up okay. Doesn't look too bad. We talked about Momo. NetEase is hanging in there pretty well, but it's had a big move, so don't be surprised if this doesn't come tumbling down if the market weakens. So another one perhaps for failure watch. Oops, what am I? Gigamon we looked at. Baba we looked at. Amazon. Now you notice Amazon has dropped below its 20-day line. Earnings come out next week, but it's coming down to the 50-day and right on top of this structure. So that's what it looks like on a weekly chart. So is that potentially failure prone? Yeah, it could be. So, you know, I'm going to just have an open mind about these, and if they, and a lot of these have had some pretty big upside runs, especially since the February lows, like Amazon. and these could become short sale targets. So, you know, what the place where you get your short list from, Scotty, is what I've been saying over and over again. It's your prior long watch list. You know, stocks that were there now become your short watch list as they break down, and that's usually the best one because you'll be able to catch late stage failed bases just as they're starting out. And remember, if you go back, I guess the very first shorting book, I think I talked about late stage failed bases, but not in a lot of detail. But that when I was doing the research before that book came out, I included my research. What I noticed is that in a lot of head and shoulders formations, when stocks break down from a head and shoulders, like you can actually see Amazon formed a head and shoulders back here. Okay, here's the big head. So you get all this volume, it defines the right side of the head as you're coming down. Then you get a shoulder, but it looks like it's going to roll over, and then it doesn't. It instead heads higher, so it fakes everybody out. So if you're trying to short in here, you could get stopped out, but the best place to be shorting would be on the late stage failure. So what I notice is a lot of peaks on heads in head and shoulders formations were late stage failed bases. So I'd be interested in how do I catch this initial break off the peak that forms the right side of the head. So that's where the late stage failed base thing came from, and I think that's where you'll make some pretty decent money on the short side at the very outset of a bear market or a correction. Follow me? So those are what you're looking for right now. That's what I'm looking for, because the best break you'll get will be off the peak of a leading stock that starts to fail after forming several bases on the way up. So, and if you had caught that, then you could have diddled around with it. You notice how it undercuts the lows in the base here? It's actually good. I don't know if I talked about, no, this will be in the next book because this came out. But notice how you undercut this low here, and that triggers your undercut and rally. So if you're shorting here on the late stage failed base, that would probably be a short cover point. And that also would be the neckline. So you would look, you know, if this were going to pan out into head and shoulders, you're starting to be able to define a neckline. So that's going to be support in the near term. And so you get a bounce. Now you're watching it probably here as it's starting to roll over. And if you're looking to short it there, but you've already made money on this break, then you've got some cushion to deal with in case it doesn't work. But you definitely don't assume anything, and you bail out once it fails to work. So let's go back. So basically what I'm trying to do here is give you guys some sense of what you're looking for, what phase you might be in the market and with respect to a lot of these leading stocks, and what you need to be looking for on the failure. Now, if we go back and look at this failure, okay, so that's this failure here back in November, well, it would have been in at the beginning of January of this year. That failure, what marks that failure? Well, it's pretty instantaneous, really, because what it is you try to break out here, so there's a break, and you instantly fail, and you gap down on huge volume. So now this can be viewed as a shortable gap down right at the outset, looking for a rally up towards the 50-day line, intraday maybe, or just hitting it there and using the 50-day line as your stop, because it's only about, you know, I don't know what, 2-3% higher. So you could have caught that move somewhere in there as it breaks. But that was a leading stock going into the end of the year, and then it blew apart when the market corrected in January and bottomed out in early February. So you also could have caught it here. Sure, I think that might have been after earnings. So, but notice how you do, clean up my mess here, that when you rally here, you do undercut these lows here. So there is some justification, although if I had shorted up here, I might be covering on the undercut, or maybe this gap fill here, or the undercut of this low, one or the other. But then you could be working it, because you can also see, hope this doesn't get you guys too confused, you undercut this low here, and you could cover that and then look for that low now to represent resistance. So this is where an undercut and rally is short-lived and the stock rolls over. And that's why a lot of people are hitting me with tweets and emails about, is this an undercut and rally? They want to buy everything that looks like an undercut and rally. And you have to remember that the undercut and rally concept is simply something I developed as a way of covering my short positions when they undercut a prior low. and start to get too obvious on the downside. So it's basically a short covering technique to bag profits and then looking to re-enter on a subsequent bounce. And watching my 620 charts, after two to 3 days of a bounce and waiting for something to roll. So that's really what it came from. And I've noticed that in this market, particularly this year, that pattern has actually turned, stocks have turned around and gone back up to the upside and broken out again. And so it's turned into an ugly duckling long setup, which is just Wyckoff's spring type of setup. So anyways, so, some other ones, let's see. So, this is, you look back at the last correction, you look at what some of the leaders did, that's what you're looking for. So if you're looking for precedents and you want to do precedent analysis, well, we know what a late stage base failure is going to look like for the most part, and that's what you're watching for. So your short sale watch list will naturally derive from your long list of the stocks that were just leading the market before it started to correct, such as Amazon at the end of December, and it broke down when the market started to correct in January into February. So hopefully everybody followed that. Did you follow that, Dr. K?
Yeah, and that second gap down was due to earnings, the gap down at the end of January.
Yeah, so a lot of times earnings present shortable gap downs in stocks that are already, so even you had this rally, you might have treated that as a shortable gap down. Anyways, let's see, what are we doing now? NASDAQ off 20, down 0.39. The Russell's taking the brunt of it, so I'm actually long the TWM. I bought it yesterday, so mainly because you had, because of the NASDAQ stalling right here at the 50-day line, I figured, okay, you're in a reasonable position to have a cascading move as it rolls over. Not a guarantee, but that's what I'm looking for. So far, I'm up a pinch on this thing. It's sort of a low-stress way to short. I'm testing this out, Dr. K, mostly because I'm not seeing a huge number of ripe short sale situations at this instant in time. So, but I think things are starting to develop, and you want to stay alert to all that. So give me 1 second here. I don't know if you could hear the bird in the background. It's my daughter's cockatiel down the hall. And he's pissed off, I think, because he wants to be part of the webinar. Anyways, he thinks he's human, by the way. So anyways, I've actually never met a bird that had full ability to fly, but he prefers to walk everywhere. So we need to keep a lot of ladders around for him to get up and down. Anyways, you can see a line. Yeah, here's a situation where you did have an undercut, and it's rallying into the 20-day line. So that is a late-stage failed base. See, and there you go. And it's failing. So yeah, that's another short sale target. But it trades 718,000 shares a day. That's good for a small account, I think. Let's see. I want to go back to BABA. I like that align though. That looks that you're definitely on the right track. So I don't know. This is sort of drifting in. You're getting a little bit of a cross here. So watch this one closely. It may flip back to the downside here and just kind of blow up with the market. We'll see. Some other ones. Cavium. Yeah, there's another one. Very good, but I think this thing trades just over $1 million, just barely. So this would almost qualify. Yeah, that's right. Now you can see this is just kind of a V-shaped bottoming pattern, but it's had a pretty decent rise, and this could fail. But it's not really what I would call a late-stage fail base, but it could be a sort of a low pod sort of failure. But I think for the most part, you're on the exact right track with that. So I'm so happy. I've actually noticed a lot of people that I've run into as subscribers when they come to us, maybe 3-4 years ago, and they were pretty lame, and they've actually gotten a lot better, and you see it in their comments and the things that they point out, which everybody can learn. Looking at light, and it's the guy who spends 5 years at it and he's still an idiot. I mean, in that case, maybe you shouldn't be investing at all. Anyways. Light, yeah, that looks like an initial breakdown through the 20-day line. So that's a major change of character. You're in an L-shaped pattern. Now, is it a Louis pattern where it's going to rally back up? or is this the beginning of a failure that's going to blow wide open? So I think the way to test it, short it here and use the 20-day line or the high of today as your stop, or even the 10-day line, because it's not that far away. It's 41.36. The stock's trading at 40.71, so yeah, that's pretty tight. And it trades just under 1 million shares, so more of a smaller account short. So I've got the actually I noticed I hit a short sale in Facebook at 130.50, so there's where it rallied up in there on the MACD stretch. I'm just looking at, I'll set orders at, short this at a certain price that looks like resistance, and then just let them get there, and sometimes they'll just go off. I find that that's better, and you do it with maybe 4 or 5 stocks, because not all of them will hit, but I find that it's better to exercise patience and let things come to you rather than chasing things. And if you have, I would say if you're looking at some of these, say, potential late-stage base failure situations, so you're on failure watch with a handful of names, if you have 5 to 10, you can work a strategy like that where you're figuring out where is resistance, and you put an order, a limit order to short at a certain price. And a lot of times they'll just get there. Like, yesterday I did not think now would get to 80, but if you set a short order at 80, it actually kissed it, and that would have gone off, and boom, you come right to the downside. So it's better to do that than trying to chase it down here, I think, and then having to push a buck or two against you, because it's not always a comfortable position to be in when something is prone to rumors or buyout, whatever, Grub, well, yeah, Grub has a similar look. That's a little bit, but it's not really breaking through the 20-day line. But earnings come out next week. But yeah, there's a big, ugly sort of pod formation. It's made a lot of progress in a short amount of time, so I think it is failure prone. So you definitely want to keep an eye on this thing. So anyways, but that's what you're looking for. And I can see that you guys are able to go through your buy watch list and pick some of these out. And those of you who can, then I think you should be shorting, so or at least working the short side. Because the one thing about the short side is I think you have to be fairly sophisticated and knowledgeable. Maybe not sophisticated, because I certainly wouldn't qualify as sophisticated, but fairly knowledgeable and experienced. And the first sign of that is being able to figure out the setup in the first place. So if you have to ask somebody whether something is this or that, then you're still in the amateur phase, I think, especially when it comes to short selling. So, if you can't really figure it out, then don't mess with it. Or if you do, you play with very small positions and learn, So 100 shares. That's how I started out, actually, just with tiny shorts, 100, 200 shares. The thing with shorting, though, is you have to be opportunistic and you have to be patient. And you also have to be, especially in this market, I've noticed you have to be willing to take the contrarian viewpoint. So if you see a breakout, a lot of times I'm looking to short a breakout, especially if it starts to fail. So, I know what I'm looking for. I don't know that it's going to work, but I will attempt to do that. But I do think right now, at this point in time, if the general market breaks in, you see the Dow's only down 27, so it doesn't really want to come apart. Maybe it's not going to do it before the election, unless Trump surges ahead in the polls. So, but this is what you're looking for right now, these breakdowns if the market starts to weaken, these late-stage failed bases. And these are going to give you your best moves, because a lot of times these are also the breaks off the peak in the head of a head and shoulders formation. So, that's where you'll get a lot of juice on the downside. So, and in this market, things don't tend to move in one direction too long, so I want to catch the fattest move I can. Once they start to form a head and shoulders, they can take an excruciating long period of time to finally break down. So, somebody says, thank you for the analogy. You're welcome. But, yeah, and you're talking about patience and setting orders at high end of range. I've been struggling with that. Yeah, that's one of the harder things to do, and you just need to, chill. Let them come to you. And the other thing is when the short side starts to work, it will feel easy. So if it's sort of hard, you short something that starts to move stutter against you, then maybe not the time to be short. So I know that a lot of shorts, the Facebook is coming back below 130. Baba's hanging out. It's probably shortable in here. use the high of the day as a stop. I also noticed TakeTwo is another one I shorted off the highs up here around 46. So this one I think I started putting out around 45.50 up here, and that was mainly because I saw this stall and then it bounced the next day. I used the high of the day as it got close and hit it there. It's starting to come in, and it allows me to come in every day and re-short it. So I'm shorted again this morning, just playing for a continuous play. But this is what it looks like on a weekly chart. So I think it is failure prone. And you have had some volume break last week off the peak. So there is some news that they're releasing some gain, which to me is really neither here nor there. I just think as it comes up to a resistance, it becomes a short. And the group also might be starting to have some problems. I mean, it has had a decent move. You look at Electronic Arts, but now it's starting to show some signs of cracking. Activision is another one. So this is another group I'm watching. And I'm actually short TakeTwo on this rally today, but or shorted again. I've been working it by covering at the close or near the close and then coming back after it later. Anyways, last question before we go, because I really want to get back to trading. What sectors will tank when Hillary wins? Who knows? I don't really care. Whatever sectors I see tanking, I'm not into predicting what's going to happen if Jupiter aligns with Mars or Hillary Clinton or Donald Trump are elected, whatever. I'm just going to watch and see what happens, because a lot of people were dumb enough to get long before the Brexit vote, and they paid for that. So the assumption that this or that is going to happen, or assuming that something is going to happen as a result of some outcome that you really can't predict anyways, why bother? Just watch the stocks. They will tell you everything you need to know. And I think I've just gone through outlining a very concrete strategy and approach for the short side if that comes into play, and what to look for. So I think I pretty much covered that. And if you haven't got that, then you obviously aren't paying attention, or you're not smart enough to be shorting. So, I think I just covered it. Did I cover it? You guys who know how to short, did I basically cover what to look for and what sorts of setups we're looking for? Yes or no? How about a vote? Somebody's asking you, Dr. K. UVXY seems to be even more erratic versus the VIX. And any thoughts? UVXY.
Yeah, you don't want to be trying to match up ETFs with the VIX. I know that's an easy thought or it's an easy assumption to make, but no, these things often do not correlate. And of course, the basis of
more like a short on the S&P than anything else. I notice it seems to correlate more to what the S&P is doing. Why is that?
Yeah, well, because the UVXY and the VXX, they're linked to the S&P futures. Okay. So that's why you kind of see that. And of course, the VIX volatility model takes all that into account. But yeah, as far as using, I mean, the VIX does have a place in the model's process, but it's very counterintuitive, I think, of what most people would imagine. Yeah. And it's not a major indicator as well, because the VIX is the VIX, and I think that's the trap. Or that's the trap I would fall into a few years ago, trying to make sense of the VIX in the form of a trading strategy. It doesn't really get you anywhere unless you use it in context with other indicators. Then it starts to have some validity at that point.
Good. Okay. It looks like everybody's agreeing that I covered what we want to look for. So, I've given you your strategy, and my feeling again is if you're going to play the short side, what I just talked about, there's some understanding behind that, and if you have that understanding, I think you are qualified to short. Otherwise, or let's say you have received VoSI short sale certification. So now send in $14,995.95 as your certification fee. So please mail that to us. I think the address is on the website. In any case, Best Buy is not really failing yet, but it has that sort of poddish look. So a lot of these guys are coming out with earnings over the next few days, so that's something I think to watch for. What happens after earnings? You get a gap up or a gap down. So, for example, I'll actually go long Netflix, on this day on the Bible gap up. Once it sets a 116.50 low, and you can figure that out on the 620 chart, then you can go after. I had some this morning. I came in with some and I sold it. So I'm selling into this last rise. It looks like it's stalling. It's probably going to come in. But now we know why that insider was buying all those shares. So anyways, I think that covers it. I want to get back to trading, so we'll get this video out to everybody too. So anyways, thanks for showing up, you guys. We'll see what happens here. I think things are sort of in flux here, and we'll just kind of roll with it and watch for things to start to break down and be in shortable positions. I think some of these, like the Align, I don't know if they come out with earnings anytime soon, but let's check that. Whoops. I gotta remember to do this. When do they come out with earnings, Dr. K?
Let's see. I'm actually using this.
Yeah, so it could break.
Yeah, November 6th.
Yeah.
I'm showing November 6th. So.
Okay. Yeah. So, anyways, so that something like that is kind of what you're looking for. If you want to try and hit the short side, it doesn't not guaranteed to work, but I think that's basically where your setups lie right now, and where you potentially can get the best moves on the downside if things start to come apart. So, still a little bit iffy, but my tendency is to think we're probably. We'll see. I don't know. Anyways, Dr. K, you got any predictions on where we're heading from here? Do you think we're going to go lower?
There's no point in making predictions because the future doesn't exist.
Good
Just
answer.
stay in the now.
I like it. So,
stay in the now.
All right.
The market will tell you everything you need to know.
I'm going to flip my lucky Bitcoin and. All right. Thanks for showing up, you guys. We'll catch you next week. Good luck. Have a great weekend.
So long, everyone.